Yeah, hello guys, welcome to this section analysis. I'm looking at this BTC USDT market analysis, and I want us to look at the overview of the market itself and look at far back as some years back and to this present moment. Now, if you look at 2018, you can see the way the market pumped 2017 and did what, corrected down across that year. Now, the year 2019 also around July, it went up again to around 12,000. Later, it dipped down to 5,000. Now, from 2020, the same bull run happened. You can see the way the market pushed high. Now, the market pushed high to this high as 64,000 level and did what? It corrected down to 30,000. Now, if you look at what happened, look at the height at which it moved from here to here, which is around over 500%. Now the same correction happened from up here down, did like a 50 something percent correction. Now look how happened here again. So normally we have to draw out our levels from the normal basics of doing analysis, trying to just spot out our horizontal lines and just to check areas of confluences, areas of levels of where price has been to in the past and likely might get to in the future. So for what we are seeing now is I just want us to have an idea of how the market is. Now, I told some of my colleagues and my students also that fine, most people believe that the market should be bullish all through. Fine is good. But you see, markets can't just be bullish all through. There are levels to get to that there will be a correction. So it's not possible for you to be driving a Lamborghini and all of a sudden you notice there's a bump and you slow down. So that's what happened in the market. There's always a point to get to a level that those that they've bought on to lock up their profits is very institution so that you can see what has been happening here in the past. So this what I'm trying to do just try to simplify analysis to see how you can apply just simple common sense to what we're doing. Now for what you are seeing, notice that price is within this channel. Now all depends on how you draw the channel. Some might decide to use their Fibonacci retracement levels, but I'm just trying to simplify to make it easier for us to have an understanding of what's happening. Now, there's some things I want to explain to you guys. Now, if you're looking at candle behavior patterns, now you can see look at this long candle and followed by a sharp wick. You can see that wick shows a lot of buyers around this level when that dump happens. So some people are actually expecting the market to dump further. Now because buyers bought this, and the next thing is look at this other candle that formed. This shows interest of buyers coming to play, followed by you can see this candle is coming. This is a bearish candle coming in. So most likely we're expecting the market to still dip down to this support zone around this 40,000 area here. Now two things can happen at this zone: either the price will bounce off back or the price will break down. Now as a trader, it's never advisable to buy at the top. It's always good. There's a saying that buy low, you sell high. So these things are what that can happen. We don't know how deep this current run is going to. Now, because we speculate likely things that can happen in the market, so we are sure of that it might likely get to those zones that's been to before. You can see those zones are lighting here now. So price has dropped here before. It's most likely either it will come and test this zone again for a good entry to the upside. So if you are smart, always take your profit while you're entering any of this trade. Now, in case the price will break these support areas, we're likely expecting the price to dip down to this area. Now, how prepared are you if market will even dump to this 30,000 area? Because it is cryptocurrency, not all about cryptocurrency. Now, the financial market itself, and this can happen anywhere in the world. So, but what we do most of the time, that's why it's always good to follow your chart while you're doing your analysis all the time. Follow your chart, and your chart tells you what will happen. Price likely will test where it has been to before in the future. So, how will it look like if the price decides to dip down, drop further from here down to this place? Anything is possible, but your preparedness matters a lot. Can this thing happen? It can happen. It's cryptocurrency. Now, some institutions that might be willing to buy, but they might not want to buy at this high price because to them, they believe that the likes of Elon Musk and some other people, it was a good deal. You understand? MicroStrategy and the rest. Do you know whether they've actually bought some lock up profit? So those are things you have to put into consideration. I put into consideration while trying to study the market. So as I'm looking at the chart, it has its own analysis, it has its own prospect. At the same time, candlestick formation also matters a lot, but candlestick formation has to do with price movement, has to do with the behavior pattern of the buyers and the sellers. If you notice that there are lots of sellers in the market and they're dumping the market, that's what gives it that characteristics of what's happening. But what you are seeing majorly just price action. You can see the behavior of what is happening in the market. The sellers are trying to sell the market. Now, some individuals which are leveraged them and decide, let's short this market because they know that fine, regardless of how it is, market must still follow the same pattern it follows, the same chart it follows. So regardless of any analysis concept you're using, just follow your chart. I can decide to raise everything. I can say, okay, fine, because of all the lines, let me just pick up my Fibonacci retracement tool, which is also good to analyze the market. And it depends on any angle I'm starting up. Try and locate a low area. You can see what I just did here. Now, looking at this, 618 is always from history, is always a good place to buy. Likewise, 382. Now, those are the probabilities we play most of the time. And if the price decided to come to this zero level, it still has an opportunity to buy. So, guys, anytime you're looking at the market, always remember that you buy at a lower price to sell at a higher price. I'm just trying to let us to have a rethink about what in one area or the other will have learned, because some people believe that because the general saying that just buy and hold, it's going to get to 100,000. Fine, it won't just jump to that 100,000. Market must breathe, must correct itself before it start moving to the higher side. That is why most of the time we speculate different directions in the market. You can see what I'm just doing here. You can see what's happening here. Now, one thing you have to understand is a level will get broken. If a support gets broken, that support turns to resistance. If a trend line gets broken, that trend line, once the price is below that trend line turns to resistance. So now, as we are seeing, as much as the price is climbing further, we believe that there are lots of bullishness. And another thing individuals do most times, they say, okay, fine, let us add our EMA. They believe that EMA is also a good thing to add to the chart. They say, okay, EMA is good, okay, let's add EMA 200. And what does the 200 do? 200 calculate numbers of 200 days. But from what we are seeing here, it's showing us that the price is still above the 200 what EMA. And it's possible that if correction is going to come, most times price also tend to come down to different moving average and exponential moving average levels. So what I'm just trying to point to you guys is most of the time always know that a support and resistance will get broken, a trend line will also get broken. So everything has to come with your concept of what cost averaging. So come to this area. Let's as I'm buying some quantity of BTC here, I decide to buy some around here, and I decide to buy some around here. This gives me a winning edge all the time. I don't have to be in the market to kill myself because I want to make daily profit. I can decide to buy at this level, and I can decide to buy at this level in case it goes down, and I can still decide to buy at a lower level. Then the zero level we are talking on, which is like the old lady method, is what 10,000. Now imagine you decide to buy one, two, three, four, these four levels, and you divide them by four. It means that in that your cost average you still give like 35,000. So everything bounces back on your principle and how you apply in the market. So regardless of any indicator, regardless of any price action concept you are putting into place, always know at the back of your mind that you speculate both directions, either to the upside or to the downside. But if it's to the downside, how low can we drop to? Now, what I just did is just a good trade plan. And the plan is okay now. In the years back, you can see the numbers of times BTC has come down, you buy, it goes up, you sell, come down, you buy. If you calculate the average cost averaging of all, you realize that you're already in good profits. So all what I'm just explaining to you is regardless of your concept of analyzing the market, always put into consideration the best concept is what your dollar cost averaging. So I believe with everything I've said so far, you will have learned one thing or the other. So thank you so much.